What is an order block and how to correctly mark an order block in your chart? This is one of the most common questions I've been getting from you guys, so I want to try my best to simplify it in this video. So after watching this video, I bet you'll be able to mark your order block in the chart. So first thing first, we have order and we have block. So what is order? Order is when you are requesting for an item. You want to buy an item. Why block? Block is huge amount. It's like, let's say someone sends you huge amount to your account, so we tend to call that amount, that's a block. You understand? So order block is an order where huge amount were dumped in the market. So from this area here, huge amount were put in the market. This area, huge amount were put in the market. So how do you mark your order block? If you are in an uptrend, it is the last sell candle that printed before that impulsive move. If you are in a downtrend, it is the last buy candle that printed before that sharp move. Let me show you. Let's say, for example, this region here. Let's use this region here to mark our order block. Where is our order block? Now, I am not analyzing. I am not analyzing. I just want to show you how to correctly mark your order block in the chart, right? So let's focus on this region first. So where is your order block? Order block is the last. Let me zoom. Let me drop my rectangle line here, because if I zoom, the chart will clean. I don't know. I'm using my phone, so let me see if I can zoom for you guys to see. Let me zoom. I want to zoom very well. Zoom very well. Let me bring this one here, because if I zoom, the thing will be increasing. So I believe you can see my candle very well now. So where is your order block? Order block is this is an uptrend. Order block is the last sell candle before that buy move. Now, where is your last sell candle? Let me enlarge this. So this is it now. Your last sell candle is this candle that printed before this sharp move. This is your order block here. This one here is your order block. So how do you mark it? You mark from the wick. You start from the wick, you bring it down to the down wick like this. Then you open it. Then you drag it all the way. This is now your order block. But however, order block can be more than one candle. If this candle is big like this, it can be used as an order block. But if the candle is small, you can add 1, 2 to it. You can add extra candle, but it must be on the same color. That is my strategy. All right. So, like for example, let me zoom out. If I zoom out now, you will see that the candle is getting smaller. If I zoom out, the candle is getting smaller. You can see. So situation like this order block is too small, because price might tend to just maybe trade to this region, reach this place, then reverse. I will now miss the trade. It is not because your setup was not correct. It is because that zone is too small, because this is a price level. Instead, we tend to have more than one candle, or probably 3 candle. If you were having 3 candle, you will see that price tap your demand zone. But if you were having 1 candle like this, you will see that you miss the trade. So your order block can be more than 1 candle. So how do you now use it? When you mark your order block like this, you now drag it all the way to the future. When price now touch it in the future, you are looking for reaction to buy. You see, this was the order block region here. This was the order block. We have 3 candle. Price came and tap it. And when price tap it, what did you see? This is the 4-hour time frame. Without going to the lower time frame, this is a valid market structure shift. Valid. Without going to the lower time frame, I can see a valid market structure shift. Now, Let's say this is the 15-minute time frame. Where is your order block on the 15-minute time frame? Let's assume this is the 15-minute time frame. Your order block, let me take this one. Let's assume this is the 15-minute time frame. Your order block is this this candle that printed before this market structure shift. So you mark it out like this. You mark it out. Let me change the color. Let's say this is your 15-minute order block. You mark it out, then you place your trade. This is how to trade. Okay, let me try to zoom out. I'm looking for, okay, this is what I'm looking for. Then you place your trade like here, stop loss below the zone here. Then your take profit will be up here. Let's assume this is the 15-minute time frame. Then what did you notice? Take profit, your trade is being hit. This is how to correctly mark a zone. You must ensure that there is an impulsive move, because that zone shows you that when price come to it in the future, because of this impulsive move, there is a large buying order and the market will definitely react from that level, hitting your take profits. I don't know if I'm making sense. So let's look for a downward example. Let's say, for example, let's say this is a downtrend, for example. Where is your order block? Your order block is this last candle here that printed. You can see this is your order block, and you can decide to add this candle to it to make it a valid and big order block. So when price comes to it in the future, you are looking for reaction. So order block is always, if you are in a downtrend, it is always that last buy candle that printed before the sharp move. If you are in an uptrend, it is that last sell candle that printed before the impulsive move. It can be more than one candle. Then you now wait. When price now tapped it in the future, you go to the lower time frame to look for 15-minute market structure shift. Then you now mark your order block, and all this strategy is what we discuss in the supply and demand book. So this is how to mark your order block.